thank you very much, everyone. It's a privilege to be here today with you to give you an update on Lucara Diamond Corporation. I will be making some forward-looking statements, so I do encourage you to review this cautionary statement at your leisure, which is available on our website. So we're really switching gears here now from talking about a lot of transition metals and traditional mining commodities to talk a bit about diamonds. And I think it's a great time to be considering investment in the diamond space because we have actually emerged into one of the strongest markets for diamonds than we've seen in the better part of a decade. We believe the best way to get exposure to the diamond space is through Lucara because we are a high margin producer situated in Botswana. We've been in production for well over 10 years. And we have completely de-risked this investment opportunity and having financed our mine expansion in 2021, which will extend our mine life out to at least 2040. With an investment in Lucara, you also gain access to a secondary business that is not a mining business. Rather, this is a technology business that involves diamonds, and it is the first of its kind digital marketplace for the transaction of diamonds. And we believe that this business has the potential to add as much cash flow in about 5 years' time as our existing mining operations do. So the diamond market, as I mentioned, is come into the sun after a rather volatile period. During COVID, we saw diamond prices discounted as much as 40%. However, we went through a quick V-shaped recovery and we're on a very positive trajectory. And the reason for that is that global diamond supply remains on the decline as a number of large world-class mines are now heading into their sunset years. So our medium to longer term outlook for diamond prices is actually very strong, and that's evidenced by the results of a number of the publicly traded diamond companies in the last several quarters, continuing strong into 2022. I'll talk a little bit more about that in a moment. Foundational to everything that Lucara does is sustainability. We have been publishing a sustainability report now for 9 years. We are a member of the UN Global Compact, and we do contribute to 10 of their 17 UN Sustainable Development Goals. We're extremely proud of our relationship with Botswana, where we are actively investing in sustainable businesses that will exist long beyond the life of our mine. And I do encourage you to have a look at everything that we're doing in country by having a look at our sustainability report, which is available on our website. So just to sum up the 10 years that it is Karowe, which is our flagship asset, we've been in production since 2012, and we are renowned for our production of very large, high-value white gem diamonds. We're also known for our approach to innovation and our incorporation of new technologies, and we were the first diamond mine to incorporate state-of-the-art XRT technology, which has been really important in allowing us to recover our largest, most valuable diamonds without damaging them. And we are, in fact, the only diamond mine in recorded history to have ever recovered 3 diamonds in excess of 1,000 carats. Another kind of interesting fun fact about Lucara is that we've actually paid out more in dividends in this company between 2014 and 2019 than we've actually invested in our operations to date. We did make a deliberate decision at the end of 2019 to suspend the dividend in favor of investing that cash flow into underground expansion. And I'll talk a bit more about the economics there. But basically, we've got at least $4 billion of revenues to come, and super excited to be extending the mine life out to at least 2040 with the potential of mining deeper thereafter. This slide is just highlighting the fact that, again, as an unusual diamond producer, we are 70% of our revenues actually come from diamonds greater than 10.8 carats in size. And these are not anomalies. We recover these diamonds regularly and repeatably. And what you're looking at in the lower right corner is a graph showing our month-by-month recovery of plus 10.8 carat diamonds year after year. And you can see that it's very consistent. In Q1 2022, we continue on this very strong trajectory where we recovered 186 diamonds greater than 10.8 carats, including 2 diamonds over 200 carats and 1 diamond over 300 carats. The underground expansion economics are shown on this slide. As I said, we expect it to add at least $4 billion in additional net revenues. This is using conservative diamond prices where we've removed all of our largest, highest value diamonds from our economic model, and we've used a discount to 2018 pricing, which we would argue we're well ahead of today with the strong markets that we've been experiencing. We are investing just over $500 million in this expansion program. It's well underway. We're about $150 million spent, and almost half of that budget is now fully committed, and we're tracking on schedule and on budget. $31 million spent in the quarter, and we're just highlighting some of the pre-sink shaft sinking activities that we've been undertaking. We are now preparing for main shaft sinking later in Q2. I want to switch now and just talk about another real differentiator for our company in the diamond business, and that is in respect of our approach to sales. While we traditionally, as a diamond miner, would have sold the vast majority of our production as rough, we have evolved our approach to sales now, where we're selling, starting to sell diamonds digitally through our Clara marketplace. And we're selling a big proportion of our highest value diamonds into a manufacturing partnership called HB, which is responsible for about 70% of our revenues. The approach is really targeting to create better alignment along the value chain. Diamonds is not like copper or gold, where you can look up the price of a carat in the newspaper each day. It's a very heterogeneous product, and it's a consumer marketed product. So it does require us to make an effort to think about how we're selling our product and how we can increase demand longer term. As I mentioned, 70% going through a supply agreement with a company that is manufacturing those diamonds. They're located in Belgium. And what this allows us to do is basically be paid an estimated price with a potential top-up paid once that diamond is actually polished and sold. In addition, on Clara is really targeting smaller diamonds, which Lucara, quite frankly, doesn't produce a lot of. We're now at a very exciting stage with Clara, which is we're now opening up this digital marketplace to other producers to sell their diamonds, and that's the real opportunity with this technology. But during COVID, the case for selling or transacting diamonds digitally was really made, and ultimately we grew the demand to the point where we can't satisfy it with diamonds from our own mine, and we are now starting trials with other producers this year. We've just put out our Q1 results. I'm not going to go through this in detail. It was an extremely strong quarter that exceeded all expectations from our analyst community, and it continues to highlight the fact that this is a very strong, high-margin asset that's operating well. We have good available liquidity to support our underground expansion needs, and we are tracking well ahead of where we were in 2021 with respect to revenue and with respect to adjusted EBITDA, and in terms of the average price per carat that we're now achieving, which is sitting at $690 a carat. When you combine the various sales channels, you can see what that looks like to make up that complement, and we are on track to meet guidance for our full year 2022. So to sum up, I would just like to say it's a great time to be looking at the diamond space. Lucara is the best way to get exposure to it. And you not only get exposure to a core business that is extremely well valued based on our current share price, you also have exposure to Clara, which you essentially get for free, which has the potential, again, to generate as much cash for this company in the short to medium term. Thank you very much.